How you doing, man?
Me or Alvin?
Alvin, I speak to him every day, so of course you are.
Okay lah. Surviving lah.
Surviving.
MCO most likely until as I spoken to you guys, a couple of weeks ago, most likely it's gonna be all the way to Raya lah. So we all should be ought to be prepared lah.
Until after Raya or till Raya, you reckon?
Raya onwards, from the looks of it lah.
Raya onwards, man. Yeah. Because if you look at it, it hasn't really come down. The numbers are still 100 plus every day.
Yeah. So we need to come down to like 0 for a few days before they can even consider lifting the lockdown, right?
Yeah.
So, and the worst thing we can do here is to lift the MCO, and then people go back to kampung and infect their parents, and you have 1,000 new clusters coming up. So
yeah, man.
Right. So let's everyone stay home and get it over and done with, and 3 months from now,
yeah, man,
we can be up and running in full.
Yeah. Agree, man.
So it's like staying home. Don't know what day is what day, man. Now it's like Saturday.
That's true lah.
I lost count one day.
I lost track of days, to be honest.
So this is how it feels a bit like going to prison, isn't it?
No, this is how retirement feels like.
Retirement, yeah.
Sorry. Let me rephrase. This is how a retirement without money feels like. Because if you got money, you can actually travel, right? So this is like a poor man's retirement. So it's not fun,
Yeah.
So better invest, guys.
That's true. That's why we are doing this, isn't it?
Yeah. Hey, your guys are watching from your live stream, your watch party, right?
I think both. They are coming to your Facebook. Some of them are coming to your Facebooks. A watch party, maybe YouTube.
Yeah, I think they're just joining in because once we start to go live, then only they get a notification.
I see. Okay.
So that's why we're chilling a little bit now, chilling out a bit.
All right.
So give that a couple of minutes. We have 200 plus so far. So we normally average about 400-500.
Okay.
Yeah. Hi guys, welcome to our show. It's on a Saturday, I know, but we are all in a lockdown. So really, thank you for joining us. And it doesn't make us lonely as well when having you guys around, right? And for those who join us, welcome to Equity Striker Investors KopiTime, right? Where we have this session every single day, including Sunday. Like I said, we have already lost track of the days, so every day will be here, right? So it's at 8 p.m. So do like our Facebook page so that you can get notifications on our next events. Right, I'm just going to mention a little bit later on about what we actually do in Investors KopiTime, right? We actually not just have our own, speakers and trainers and experts. So we invite people like, Faizul Ridzuan here, who's an expert in property. We invite CEOs, we even invite guests who also talk about economics and also other markets and so on, right? So we have quite a number of special guests around as well. So hopefully that you are able to get some insights and advantage by joining us in our KopiTime every day. Yeah. So like I said, while the others are coming, I'll just explain to you more about Investors KopiTime and also the sessions that we are having, which we have actually started an online campus, right, for those who are interested. So I will share with you guys later on, right? Okay, so let me start. You want to start now?
Sure.
Yeah, I think we have about 300 people already accepting, so don't want to delay them. So we better start, lah.
Yeah, not fair for those who came early. Show up. Thank you, guys.
All right. Welcome again, everybody. So today is our second round or final round. I don't know. Maybe we'll probably have another round if today is still not enough. Right. So if you have missed the first one was 2 weeks ago, right? You can actually view the recording on Equity Striker Facebook. I'm not sure, Faizul, you have it on your Facebook as well, the recording?
I think we have it, yes. It's still there.
Yeah. So it was 2 weeks ago. So you can look at the first round, right? What we have talked about, basically. The first round is more about, why should you be looking at investing, especially in times of crisis like this, right? So that was the first round. So the second round is basically we want to discover the pros and cons at both investing. And we basically want to find which investment asset class which suits you, lah, right? Or it could be both, right? So we're going to take a look at the pros and cons. We're going to discuss. We're going to talk about this. And if you have any questions, just write the comments down there. So if you want to have a specific question to a specific speaker, like if you want to ask Alvin, you just type in Alvin, or you want to ask Faizul, you just say Faizul, right? Or if it's an open question, then you just type the question in, lah. Okay. So what we're going to do today is both Alvin and Faizul is going to basically share with us 3 reasons. All right. So they only have 3 punches, not more than that. Okay. 3 reasons why stocks or property is better than the other. So Alvin is, of course, going to defend stocks. We're going to basically share with you the 3 reasons why stocks is better than properties. Faizul is going to come in and basically share with you the 3 reasons as well why property is better than stocks, right? And then, of course, both of them have a chance to also counter the other person based on the 3 reasons, but only for 3 minutes. I don't go longer than that, right? And guys, if you want to have any questions, you need any clarification from any of the guests over here, right? Please ask the questions. All right. So we have Alvin Vong, who's going to represent stocks, and at the properties corner we have Faizul Ridzuan. Okay, so we're going to start with the equities corner first, which is Alvin. So Alvin is going to share with us 3 reasons, and then Faizul is going to share his 3 reasons, and then both of them will start the counter in 3 minutes. Okay, Alvin.
Yeah.
It's all.
Okay, so I'm going to get started now. Before that, I got a disclaimer. I also own property, right? So I can't say I'm 100% against property, okay? Just a disclaimer. But at Equities Tracker, we believe in making investors more informed through being data-driven. So I think one of the first things that if you talk about stocks versus property is that stocks are fractionalized, right? Meaning you can buy 100 units, you can buy 10,000 units, you can buy 20,000. So where I say that it's a slight advantage over property is that, if I buy a unit, which is a whole unit, if I have to dispose, I do one buy and do one sell as a transaction. If you talk about stocks is really, if you buy 10,000, I can sell 2,000 first, I can buy it back again, right? So number one actually is fractionalized, all right? I think number 2, if you talk about stocks, once you do your research once, which means that if you done, I'm quite sure when you do property investing, you also do your own research. But from my experience, it's for stocks, once you do your research once, you can go in and out multiple times. So you could have bought it when it was cheap, when it's gone up, you can take profit. But maybe like times like this may have come down again, I could go back again without having to do a lot more research, right? So in terms of in terms of flexibility, do your research once, multiple times you can use it, right? So I think number 3 for me, sometimes I do have to manage tenants, and as an amateur investor in property, it does get quite tiring. But I think for stock, it's quite maintenance free. I put it in inverted commas, quite maintenance free. I don't have to fix anything and nothing to fix, right? And if I do get a dividend comes into my bank account directly. And of course, a bit unlike rental, if I can keep continuously increasing, if I buy a good company, my dividends over time keep increasing without me having to ask for it. So because I'm a bit lazy, right? So stocks in that sense, you can sort of do it from your armchair, right? So those are my 3. Can you guys hear me? Benny, I think you're on mute.
Yeah. Sorry. Yeah. Well, that was quite fast.
I thought we had 9 minutes.
Yeah. Okay. So Faizul, you got it right. So I'm just going to show you a little bit of just basically summarize what Alvin said. These are the 3 reasons. Number 1 is fractional, right? So you can buy smaller number of shares with smaller capital. You can buy, as much as you want and as little as you want as well. One-time research, and you can make many decisions, right? So you don't need. Like Alvin said, he's a bit lazy. No need to do much research, right? But one-time research, you can make many decisions on the stock that you're trading. And number 3 is that there's less hassle, right? Hassle-free. you don't need to manage tenants. All right. So these are the 3 points where Alvin mentioned is why stock investing is better than properties. Okay, so Faizul, over to you.
No, I'm just going to throw the towel. Thank you very much, everyone. I think I'm just messing around. Okay, let me just quickly share my screen. Okay, so we've got 3, right? So I guess the first one here is that before I start, let's do a disclaimer. I buy both, right? I don't believe in buying just one. I think you can't call yourself an investor if you actually haven't studied multiple asset class and you only know one asset class. So my view is that I study everything, but I focus on a few. So property is my primary investments. Given the timing today and the opportunities that will loom in the next 12 months, we are now going heavily into stocks as well, right? So I guess the 3 advantages of property over stocks here is that number 1 here is that I feel in order to get to 5 million ringgit net worth, right? So meaning if you sell everything and that's what you get to keep, right? Property is just safer because it allows you to leverage and have got the capability of getting someone else to pay on your behalf, which is OPM, right? So I can quite comfortably build today a 5 million ringgit net worth on property with 0 capital, but I don't know how to do it with stocks. So for me, number 1, from a capital point of view, it's cheap. Number 2 here, the fact that it's allow you to do leverage gives you even a better advantage. And ultimately, if you look at the cost and the capital requirement, it's just much cheaper, to build a 5 million ringgit net worth. The other thing here, from a safety point of view, you've seen a lot of stocks that went to PN17. You look at Luckin Coffee, they cook the accounts, in the last quarter, and that has caused the stock to tumble by about 80%. You would have never seen a property drop in value by 80% in a year. There's no such thing as a property that has got 0 values after 5 to 10 years, unless the project is abandoned. And even abandoned project is able to make a couple of 100,000 upon recovery, right? So with that, speaking from a perspective of someone who has built a 5 million ringgit net worth using property, I feel is safer, right? Because you can't go to 0, right? So these are all examples, right? So point number 2 here is that the cool thing about property here is that there's no such thing as your outcome is similar to someone else, right? Because, for example, today I buy in bulk and therefore my entry price is better compared to most of the retail investors. So unlike stocks, whereby if you buy at a certain price point or a certain time today, naturally you all buy roughly about the same price during the day or within a range. But today I'm buying things at 20% cheaper simply because I buy 20 and 50 units, while a guy who walks into a sales gallery pay 20% higher, right? That's point number 1. Point number 2, point number 3 here is that from a results point of view, property also give you a better control on the outcome. So for example, one of the best advantage of stocks here is that you don't have to do anything, right? So essentially, it's basically hassle-free, right? Your capability of making money from the gains or dividends is largely hassle-free once the research is done. Property, sure, there's a lot more work required, but at the same time, from a result and outcome point of view, it's not fixed for everyone. So if you look at this, these are examples of property that we bought, right? And that was completed end of last year, early this year, and some of it is early last year, right? So we've got, for example, on the left here, right, whereby you've got people renting at 1,300 ringgit per month, and here we are getting 3,000 ringgit. So can you imagine, people buy the exact same property, some of them got rental 1,003, we got 3,000, right? So exactly the same property, right, potentially bought at the same price a couple of years ago, but our rental is more than 100% more, right? On your right, for example, is another example whereby you've seen property being rented at 1,005, at 1,006, yet our clients are getting a rental of 3,006. So again, this is not a case study of 10 years ago, 5 years ago. These are case study of property recently completed, right? So less than 1 year. So second advantage of property here is that your result is not the same as per someone else. If you do more, you tend to get a lot more, right? And the third one, advantage here is that property allows you to have access to free 1 million every 5 to 10 years. So 7 to 10 years is quite safe. For me, it's 5 to 10 years. And today, for example, what I'm doing here is that I've got a bunch of fully paid property, right? And I now plan to refinance those property to get about 1 million so that I can buy stocks today. Because like I said, in my last webinar, you leverage to the max to buy property and use whatever cash you have to go and buy stocks, right? So I'm going for both, right? So what I'm doing here is that every 5 to 10 years, I get free 1 million. Why do I say free? Because my property value would have gone up. I'm able to refinance. And the best part after refinancing here is that the rental I'm getting is still more than what I need to pay to the bank. So that's why I said every 5 years, I get free 1 million ringgit, right? So I don't know how to do it from equities. I'm probably not well versed enough to go and do it by equities, but property is quite easy, right? So, as per what I've, highlighted in the webinar 2 weeks ago, I think, right? So my plan right now is to make sure I have a minimum 7-figure fund to go play equities. And like I said, this is going to be a free fund technically because it's not savings. I didn't save for this money. I basically just unlock it from my existing properties. Rather than using value investing principle, I've been a student of the Great Recession. So I studied the 1986, 1997, 1998, 2008, 2009. So I'm doing a hedge fund play when it comes to my stock investment for the next 2 to 3 years. So maximum I will invest is 3 years. I'm going to go short on certain stocks. I'm going to go long on certain stocks. So, that's the plan. And of course, in summary, guys, I feel that, if you don't do both and you make less than 1 million from this crisis, I don't think you are doing enough, as an investor. So that's my 3 arguments.
Right. All right. Thanks. So Faizul, I just summarize. You have 3 points there. Number 1, it's basically safer than stocks. You have leverage and OPM, which is other people's money, right?
Yep.
And stocks are very volatile. You said stocks may go to zero, but you don't see any properties go to zero before. So you have the safety net there. Number 2, you have better control on your outcome. You mentioned that different people have different outcome on their investments, right? So you actually have
on
to
the
control
exact same property, bought at the same time, right?
Yeah. Okay, so and then the third one is you can get free cash flow, like free 1 million every 7 to 10 years, and I believe that's through refinancing, is it?
Yes, one of it.
Right. So yeah, free money every 7 to 10 years. Okay, so that's the 3 argument. Now, so Alvin, do you have anything to say with these 3?
Yeah,
Number
I
1?
can. Let me sort of rebut. So
Leverage and OPM.
yeah, I think on not needing capital, I think one of the true greatest advantages of property is because you are able to leverage, and also because our banks are still from 100 years ago, where they feel that everything that you can touch, therefore it's safer. But I think we've gone sort of beyond that. So what we need to do is not change the system so much, but really to work with the system. So I can tell you my first initial capital to really get started in stocks was really by refinancing my home as well. So I think it's the same. So if you can refinance your home, it's also OPM. Therefore, it's ultimately it's also you don't need capital to start with stocks. That's the first one. So I am in agreement. So it's really how you do it, right? I think when you talk about volatility and we talk about fraudulent accounting, you're right. There have been very big cases where stocks have just come from maybe lose 80% in one day. It is very possible. I also think that is where the opportunity is. If stocks don't drop 50-70% like how they are today, when they drop this way and they recover, it's a lot easier to make the 100% without waiting 3 to 5 years. Those are my thoughts. So volatility can be your enemy, can also be your friend, right? Now, I mean, if you look at a longer term, like you say, 7 to 10 years of getting $1 million, I want to share sort of my screen with you guys. And this was something that I did with my students probably 2 days ago at our online e-campus. I showed a very simple idea, right, which was just 7 to 10 years. Like I said, I did 10 years, right? And I didn't pick any specific date. I didn't pick a specific date. I just picked end of the year. So like you said, everyone gets the same thing. But I don't feel that everyone will get the same thing, because everyone's mindset when it comes to stock is different. And in fact, this is very much a zero-sum game, because if you sell and someone else buys, but there's only one winner on that side. And what you want to be is to be the winner 7 out of 10 times, right? So when they are winners, they are also losers. This is the game for stocks. So if you look at this, is actually done over a 15-year period. If I talk about property being as safe, I've always used Nestle, because Nestle is a company that's easy to understand. It's also it's a business that's very easy to understand. Everybody uses it, and you can see how well they're doing by just walking to the supermarket, right? Right here, actually, I did a 15-year projection just to give you guys an idea what it looks like. If you had bought a share, 1,000 shares, so this is not in crisis. 1999 was actually the peak, right? So this was not done on any particular date. And if you can look at this, when I did it up to 2015 generally stocks were down because they introduced GST in Malaysia. So there's no special timing in this. But what I want to show you is that if you had bought 1,000 shares in Nestle in 1999, it was $16.40. Yes, it was very pricey. So one lot would have cost you 16,400, right? So if you had property, great, and you can refinance it, borrow at 3%, is what you get. But the dividends that you received over 15 years was actually way above what you paid for it, right? I forgive me, but I have yet to see where my tenant can pay me back 1.5 times my property value in 15 years. Because if you think about it, this is purely from dividends. It's got nothing to do with capital gains, right? So which means that and this is me not managing a tenant. I've got nothing to fix, and this is net of taxes. That if I put 1640, I would have gotten back $24.18. That's 1.5 times my original capital. The share price as of December 2015 was $73. Today it's 133, right? So I'm not taking today's price. So if you look at the full thing, you started off with $16 and you made 4 times your return over 15 years. I'll say, look, that's decent, with not a lot of work and very simple, right? And maybe this is where I'll share a little bit of how we look at safety, right? So just like how Faizul will look at safety for property, I look at safety from a different aspect. I'll give you another quick one. This is Digi. This is Digi over 10 years. Again, it's a simple to understand business. Everyone has a mobile phone. You use more data, therefore you pay more subscription. This is their return over 10 years, right? And I'm a big fan of Digi. Back in 2005, if you had bought Digi shares, you would have spent 7,700 ringgit. In 10 years, you would have got roughly almost 4 times your original capital. 10 years, which means that imagine if you bought a property for $100,000 today, just your rental alone in 10 years is 400,000 net cleaner. There's no taxes, there's no building maintenance, there is no taxes that you have to pay. This clean 4 times, right? And the value of the shares at that point in time, 2015, now it's slightly lower at 4-ish, but it's 54,000, right? So 7,007 would have given you a cool 10x, more than 10x in return. So in terms of rental, I'm not very clever at making my property work for me rental, but I know if I look at stocks and I can build that skill to look at it and to gauge the safety, I know that even for ringgit, even though I can't leverage, my returns can be quite multiple times higher when I purely look at it just from a point of dividends. And I mean, just to speak a bit about safety, I'll just show you guys quickly what I mean by safety, right? So I have here on my screen, this is the equities tracker, but I'm going to show you a very simple stock, how we analyze it. And here's a great thing about stocks, is that there is a ton of data, and really, if you know how to use that data to your advantage, we hope that you become on the winning side, because stocks is buy and sell, right? So on each transaction, either winner or loser. If you look at this stock Nestle, right? They actually, if you look at it, they actually have been profitable every single year for the last 10 years. In fact, if you want to talk about safety, they have been profitable for the last 25 years continuously. That means they've gone through 4 major recessions, including the 1997 crisis, and yet they still made a profit. Yes, their share price may have changed, but fundamentally they're still strong. Even in dividends, if you look at how much dividends they pay out, they actually pay out dividends every single year. They have been doing that for the last 24 years as well. And on top of that, if you look at the cash flow, they are always have been cash flow positive for the same period. So for a quarter of a century, these guys have been continuously giving returns to shareholders. So, if I find a stock with a similar characteristic today that is selling at 70% of discount, that's safety for me on 2 counts. One count of safety is that fundamentally it's good. Second safety in timing is that, and here's the thing, right? Not everyone will get the same returns, because for someone to drive it down 70%, it means that someone else has to buy at the other end, right? So only one guy can be the winner, right? And that's really, to give you a nutshell, that's really what, if you invest in stocks versus properties, it's just a slightly different way of mindset. But essentially, if you're value investing in regardless of any asset class, it's the same. You're still trying to buy $1 for 50 cents.
All right. So we really tend to, I mean, there are certain similarities in stocks investment and properties. Of course, one of the things that Alvin agree is the leverage part on the stock on properties, right? But of course, you can go on some of the question that says, you can go margin financing, but margin financing is not cheap, right? I mean, property mortgage, what they call loans are still much cheaper, right? So you may want to consider that, okay, so Faizul, now your turn, right?
Okay, since Alvin uses an example of Nestle in the year 2000 and DG in the year of 2005, so I need to use an equivalent example. I don't have a chart, but it's sitting in my head.
No problem.
In year 2000, a double-story house in Bandar Utama cost 150,000. So if you purchase 1,000 units, right, of Nestle, it costs you 16,500 thereabouts. Yes.
Yeah.
So you can actually buy a Bandar Utama double-story house with that 10% down payment in the year 2000 for 150,000 ringgit.
Yeah.
If you fast forward in 2015, which is at the peak of the property market, similar exit timing to the Nestle stock, then we're looking at exiting at 1.3 million. So from 150,000 purchase price, you exit at 1.3 million, right? So that basically translates to 8 times versus purchase price. But you need to pay 16,000 to buy 16,000 ringgit worth of Nestle stocks back in 2000.
Yeah.
But in year 2000, you only pay 16,000 capital to actually purchase a 160,000 property.
Yeah.
So a 16,000 ringgit capital would give you a return of roughly clean, 1.1 million after 15 years.
Yeah.
Right? So now, if you fast forward, if you're talking about dividends as well, if you look at rental rate as of today in Bandar Utama, post year 2013, 2004, it has actually breached anything between 2000 to about 2005. So if you purchase a property at 150,000, your mortgage would roughly be roughly about 800 ringgit. So on a 2,000 ringgit rental in the last 10 years versus a mortgage of 800 ringgit, you're essentially getting a dividend of roughly 1,200 ringgit per month or 14,400 per year. So essentially, we're looking at a dividend yield of about 90%, right? So again, because property has got this leverage advantage, and borrowings are so cheap compared to margin financing. So again, property has got a very unfair advantage. So if you move forward to the second example of DG in 2005, that's when I bought my first property of Kelana Puteri. So my initial capital was 2,000 ringgit, and that was the capital I used, and I get it back within 1 year. So essentially, I paid zero to buy that property. So that property that I paid zero to buy gives me roughly about 300 ringgit positive cash flow per month as of today. On top of that, if I were to sell and exit my position today, I'm sitting at roughly about 200,000 gains, excluding all the rental collected in the last 15 years, which I calculated just now works to about 54,000. So the beauty about property here is that, over a long period of time, because of the leverage advantage and the fact that there's, capital reduction in terms of your loan, your equity just becomes a lot better over time. So over 5 to 15 years, the returns on property is a little bit unfair to compare to anything like stocks or even gold, simply because of the capability of us being able to get leverage. But again, having said that, I'm sitting here today as a big fan. I've never made a buy call in buying stocks. But I've been telling my 30,000 members, of FRPG recently, next 1 year, stock, guys, stock. Next 3 months is to really unlock as much cash as possible. I just call my banker. I ask them, how much cash can I take out from my property as of today? They say conservatively 2 million without any rental. Yeah. So my game here is that, if I want to buy stocks, if you look at how the hedge funds are playing back in 2008, 2009, I'm looking at the 200% to 300% over the next 2 to 3 years. So again, this is not me trying to come and say either is better. Over a short period of time, I generally feel in times like this, stock has got a way significant advantage. Your 200,000 can become 500,000 or 1 million next 2 to 3 years. And that one, there's no such thing as a property will be able to compete in a short period of time. But over 5 to 10 to 15 to 20 years, then property is a runaway winner.
Yeah, so I guess, of course, the property has an advantage in leverage, right? I mean, that's being, I think we have agreed to that. But when Alvin brought out the 3 points there is, one is about fractional, right? Because in times of crisis, the reason why someone prefers stocks is because they can actually sell their shares, if the amount that they want, and you don't need to sell the whole lot. So that's the fractional part.
You can actually do it by properties as well, but that one is just a bit more complicated and a little bit more sophisticated, not available to everyone. So you can still do buying fractional portions of certain properties. You can actually still do it, but that's probably a lot.
That's another together.
I'm not talking about REIT. I'm not talking about REIT. So this is like a different ball game altogether.
Yeah. What about managing talents? Because that's the last point that Alvin brought out. Because it's not easy to actually manage talents sometimes, right?
I would put it this way, I used to be a very brash investor, talking about people, if you're making less than 100% return, you're not a great investor, but that's what I say when I was poor. As your net worth balloons to 7, potentially 8 figures, then you begin to realize if you want to buy property equivalent of an 8-figure sum, the amount of time and work required is just high, right? So at that point of time, then it's a lot more sensible to go buy stock. So again, if you are talking about the work requirement for you to invest in stock versus property has got a lot more post-purchase work. Right, so post-purchase work, property has got by far a lot more, which is why, for example, one of the biggest advantage that we do in FarCap here is that, when clients come to us and invest, we don't just do the research before you buy. We actually do all the way up until like 20 years of property management. So it's painful, but I think one of the main reasons why I want to do it is that we want to make property investing to be easy and accessible to as many people as possible.
Okay. All right. So so you guys remade your points. Now we try to listen what the audience they have questions over here. And then maybe 5 minutes before we wrap up, and then both of you can actually mention what will your strategy be when it comes to stocks and properties, right? But let's listen to the audience first. I think first question I got here is from Muhammad Shahir. This for Alvin, right? Is it relevant to invest in a certain stock by doing research based on just annual reports?
I think annual reports are a great source for research, but you can't use only 1 year because you can't really tell much from reading one. In fact, at least I would dig out 10 years of annual report to actually go through it to really understand the business. So what we have done at Equity Striker is actually shortcut that process, like what I've just shown you just now on the website. We've actually taken all that data into an annual report and organize it really well, so that you can actually make much quicker informed investing decisions that are data driven. Yeah.
All right. Next question is to Faizul. Okay, Faizul, there are quite a number of questions here. Probably maybe a lot of our listeners are stock investors. All right. I'm just going to summarize a little bit. Number one, they were asking how you can get that kind of yield, right? Where you are able to, your mortgage is like 1,008, but you're getting 3,000 rentals, and it seems like it's quite difficult for them to actually get this kind of returns.
I mean, if you don't read enough, you don't learn enough, then naturally it's going to be quite impossible. It's like akin to saying stock is bad simply because someone lost 80% on Luckin Coffee last week. But if I speak to people like Alvin, the odds of him getting 99% of the stock picks right is very, very high simply because he's a master of his trade. So similar to mine. Now, I've spent 15 years to perfect this. Right, and I'm trying to make it as accessible as possible. So there are a lot of ways that you can do it. So, for example, I think I'm going to share with you some of the answers later when we do the, what is the criteria that I look for when it comes to picking properties. So I think once you understand the 7 criteria, then I think, and you follow those 7 criteria, it's not that difficult to do what I do. But you must first learn the rules of the game. Right.
Yeah, so I think you shared this in the previous one, right? In the previous live session that we had, you shared these 7 criteria, isn't it?
I don't think it was in great detail, but
Yeah.
But
so I guess
I will elaborate a little bit more on the rental bit. Yeah.
Yeah, and I still remember the last session you mentioned that I think a lot of people got mistaken by investing properties by looking at location, right?
Correct. Yeah.
And you mentioned it's total bullshit, right?
Total bullshit, guys. Don't believe in the location hype, It's what the developers try to bullshit you. Seriously.
It's Faizul, right? That's the correct
No. Yeah. Price.
Yeah, so I guess that's why people get caught, lah.
Yes, they do. Yeah.
Right. Okay. Now, I'm not sure whether you want to reveal this, but at this kind of times, are you still able to get a positive rental yield?
Well, I just showed result from last year, and this.
So that was properties that you bought last year, is it?
The property was completed last year. We bought it 2 years ago, so it was completed then last year, right? So and some of the blocks are completing this year. So if you ask me, the simple direct answer to that is absolutely yes, sir. But will everyone be able to read? Then the answer is no. Right? So that would be the short answer. So yes, definitely possible. We have done it. That's why I show results, which is property completing last year and this year.
All right.
I think maybe just to add, I think really it's I see a lot of comments that coming out from stocks on property. I mean, these are very common beliefs, right? But we've also seen investors actually disprove a lot of these common beliefs that happen. A lot of people say cannot make money from stocks, yet a lot of people have made money. A lot of people said, I can't get good rental yield, yet a lot of people get good rental yield, right? So I guess ultimately at the end of the day is, do you actually have a strategy for your asset class, right? And what techniques or how much time and effort have you put in to test some of these techniques that is more often repeatable? I think regardless of asset class, that's really where it sits.
I think I just want to add to that, Alvin. I think people completely underestimate the importance of data in property, because I've seen a lot of very smart guys who buy stocks and make money because they study a lot of data. They do the complete opposite when they buy properties. They don't look at data. They just look at developer. Okay, look nice. Fountain look great. Okay lah, I go buy. Completely emotional. So
you know what? We get a lot of those in stocks as well. I don't know whether they're property developers, but we get a lot of people who just think they can go in somehow. They're new. They have an idea, and somehow they're gonna beat the market, right? And
right.
That never really ends well, right?
So ultimately, you see, at the end of the day, the idea of value investing is that to do your due diligence, to look as many data points as possible, to hedge your risk. So it's the same thing whether properties or stocks is going to be the same principle, except for I feel a lot of people are being a lot more emotional when they buy property versus stocks. Right? And therefore, for example, they're wondering, why am I not getting the same level of result? Because they don't do the same level of homework. They don't study the median, the asset class in that area, how much people are willing to pay at the point of time, and what kind of rentability you'll be able to get, maturity point. So these things, like, for example, things like whereby you do it, it's a ABC in stocks, you don't do it in properties.
Yeah.
Right? The same due diligence that you typically do in stocks, you just don't do it in properties, and therefore you don't get the same outcome. Yeah. So I think people completely underestimate the idea, the importance of collecting data before they even buy property.
Yeah.
All right. Now there are a lot of questions about future investments, but I'll take that one into the last question later on, right? Okay. For this is for Faizul. Do you see property prices coming down in the past 1 or 2 years?
For the past 1 or 2 years, or for the next 1 or 2 years?
Yeah, for the past 1 or 2 years. I mean, because a lot of people think that the property market has slowed down, right? For the past at least 2 or 3 years. Even stock market has also gone down a little bit. So has the property prices gone down as well?
So I think if you look at the index has continued to to be able to point upwards. So we're registering like less than 3% growth last year, right? So contrary to stocks, but again, index is just an index. It doesn't mean anything. Just because 80% of the people are losing money, it doesn't mean that you should lose money as well. So for example, right, in the properties that we bought at 420,000. Now, after completing, transactions are between 500 to 520, 530,000. So people just made 100,000, right, on property that was completed last year. But is there a lot of people lost money? Of course, because things that is worth 600,000, they end up overpaying at 800,000. Well, it's like buying Nestle 150 ringgit, per share, and hoping to be able to make more money because, well, in the last 10 years, Nestle has continued to go up. You know what I'm trying to say, right? Ultimately, right, it all depends on your entry price and what's your strategy, right? So just because some people are losing money when properties, it doesn't mean you should lose money as well. And I think it's the same for stocks. So if you ask me, if you look from an index point of view, the index has continued to point upwards even last year, right? This year, most likely, we will stay stagnant. But is there going to be a lot of property that lose money? Absolutely, simply because these are property bought 5 years ago and they're already bought at a completely wrong price. So when that happens and you have a more than 10-year maturity point, you're going to lose money for the next 10 years.
Okay. Now there's another question here that asks, I'm basically summarizing a few questions together, so it's not 1 or 2%, right? One of the things is, do you both agree that there are more opportunities in stocks than in properties?
Today?
Yeah, I mean, at any point of time, because I think for those who are investing in stocks, Bursa Malaysia, we have 1,000 over counters that you can look at, right? Whereas property, I don't know, maybe property there's more. So
I can't speak for property though, because I don't know property market well enough. But I can tell you for stocks, you are spoiled for choice today. And I think maybe one advantage of a stock, like let's say versus property, is that I can also very quickly go out and buy stocks in the US, Germany, France, wherever that has been really hit badly by COVID. And China is now number 5. So you've got Spain, you got Germany. So I think the benefit of stocks is that you can actually go multi, or it can be global, right? So wherever the opportunities lie. So today, I think there are tons of opportunities when you talk about pricing. In fact, I just did a very quick scan earlier when I had a session with the students today on the ET Online campus. And out of 900 over stocks, we found 450 stocks today that are selling less than 10 years ago prices, which means 2010, that means it's selling. So if I put in the inverted commas, 2010 would, let's say I bought a property in 2010, that price, they're selling below that price today, stocks, right? There are 450 in Malaysia alone. Yeah.
Okay, Faizul?
Well, I can definitely vouch for properties. There are a lot less opportunities in properties today compared to stocks. which is again, you see, I couldn't find at the back of my head today any property that you can buy today in this crisis at a price similar to 2010. You can probably buy it maybe 5%, 10% cheaper compared to last year, but there's no way it will drop below 2010 price point. I cannot even think of one, right? So I think it basically speaks volume about the capability of property in the long run. It's just safer, right? And it's not subject to a short-term sentiment. All right, so I think, like I said, it's a disadvantage, but at the same time, it's also an advantage. So if you ask me, is there going to be 400 properties that you can look at today that is trading at 30, 40% below its real value? Then the answer is no. I can probably think maximum 5. That's it. And those 5, you can't even get those kind of price point unless you buy a minimum volume. Right? So I know the price I'm getting, so I know I am buying below, but I don't know if you can walk in and simply just buy. So I think in a way, it's just different. I don't think it's fair to really compare both, simply because the level of security, the level of stability is just oddly different.
Yeah. I guess that's because of the volatility, right? Because when the stock market start to come down, everything start to come down, but you don't see that in properties, right?
You don't know. People,
right?
Asians believe properties cannot go down in value.
I think maybe just to add 450 stocks that we filtered out, actually is equivalent to 50 more than about 50% of all stocks on Bursa Malaysia, right? So can you imagine all properties, 50% of them are selling at 10 years ago prices, right? It's
I'm not
crazy.
surprised. I'm not surprised. Guys, it's been 15 years since I taught people on property investing. Never in my life, up until February, the moment I realized we have a global recession, I'm telling people to buy stocks. Yeah. This is my stand only in the last 60 days, the moment I realized we have a global recession coming. And I was a dumb young guy, 12 years ago. I didn't buy any stocks. I made 5 million from properties, but that's about it. I could have made a few million more if I were to buy stocks, if I was smarter. So not going to make the same mistake. So I fully agree. In the short term, for the next 1 to 2 years, I've been telling the same to my students. There's quite a fair bit of things that we can buy with an upside of 100 to 200%. Sector-wise, we're looking at some stocks at 300% upside in the next 24 months. Where we do the numbers, so we are in agreement. Short term, there's gonna be a lot more opportunity in stocks, which is why we are telling everyone raise cash.
Okay, now because actually our audience are mostly stock investors, so a lot of questions actually is coming for you, Faizul.
Okay.
You're already convinced on stocks, right?
Yeah, I think on stock side they probably listened to us like since 2 weeks ago already. Okay, one question here is about age, right? Because as we getting older, right? Maybe let's say 50 years old, or probably near retirement. How can they still invest in properties, right?
I would think right now there's a 75% chance of a property bull run happening in the next 3 to 5 years. Right? There's a 75% chance of a property bull run happening in the next 3 to 5 years. The last property bull run, in that 5 years, anything that you buy went to 100% gain. So basically, you buy something worth 400,000, it becomes 800,000, right? In 5 years. So as long as you are not 94, like our Prime Minister, or you're not above 70, but you can't get a loan. If you ask me, if you're 50 and below, you can still buy property and just take a 20-year mortgage, right? One of the rumors that we've been hearing right now here is that because they foresee a recession, and typically during recession, lending requirements then go down, right? Banks are a little bit more relaxed. And if you notice, the statutory reserve by Bank Negara has been reduced to about 2%. We have about 30 to 40 billion additional liquidity. All of that basically points out to that lending will get easier in the next 3 to 9 months for people who are prepared. So it's not going to be for everyone, right? So people who are prepared, lending will be easier. As long as you are below 50, if you ask me, you can still buy property and you can still take a 20-year loan. But of course, if you are 50, then the game plan here is to buy right before property bull run, and then you can look at exiting after property bull run if you want to. Otherwise, just keep it. As long as the rental can cover, you don't really have much of a problem.
Okay, so another question to you again, Faisal.
Sure.
For those who are unable to get positive yield in rental, where actually they pay mortgage more than the rental, right? And even some properties are unable to rent out because they can't rent out, right? What should they do with the properties like that?
The simple answer is to sell. But if you bought the wrong property, then it's almost impossible for you to exit today without incurring a 50,000 to 100,000 net loss. So my advice to people who are already stuck is to continue to keep the property in the next 2 years. Because like I said, in a property bull run, everyone makes money whether you are smart or you just made a mistake. So count your lucky stars and pray that I am right. Because there's a 75% chance now, right? If you look at historically, globally, right, property bull run, whether in Singapore, Malaysia, or Indonesia, or UK, or US, it's all driven by 4 factors. And out of the 4, 3 has already started in Malaysia. So basically, we are more than halfway. So we're left with only 1 factor. I will not be able to reveal that factor today because those are exclusive for clients. But like I said, pray that I'm right. Ran at the loss as of today, and if I'm right, you will see a 10 to 20% movement of your property values. That's when you quickly exit, and you typically want to exit within the next 3 to 5 years. Right? That's point number 1. Point number 2 here is that worst case scenario, which is why I would recommend people when they buy property, they follow 3 criteria. 1, you must be able to cover your rental must cover minimum 70% of your installment to cover interest costs, right? Number 2 here is that you don't buy above market value so that you can exit at any point of time without loss, right? Third one here is that, which a lot of people underestimate, is that you should buy property that you can stay in. So that means worst case scenario, you duduk diam-diam lah dalam property tu. So you probably would have a bunch of property and some of the property made money already. So move from your money-making property, rent that one out, and then stay in, the loser lah. Right? Because the loser eventually, after a couple of years, after you hit certain level of maturity point, will begin to make money.
Okay, so now almost similar question to go to Alvin, right? What should they do on stock prices that has already fallen quite a lot, and they're still holding it?
I would buy some more. Look, if you're already holding it, I think there are 2 options you can do. It depends on how your portfolio looks like. If you're like every investor, you have a little bit of everything, then where you want to do now is actually rebalance your portfolio and potentially look at companies that are still very solid. I'm assuming they're good companies. That you want to take some profit on those that have gone up, and actually maybe move it back to those that have gone down even more, right? So that when you get the rebound, your total portfolio will grow. So that's one option if you don't have extra cash. If you do have extra cash, I would, if there are stocks that you like and you've done your research on and you know them really well, I would actually average down on those stocks as well. But the caveat is this, right? They must be good quality stocks, right? Because if you're gonna average down on something that is fairly high risk, so like what Faizul was talking about, Luckin Coffee. Luckin Coffee is what we have 6 classification of stocks, right? First is investment grade, second level is emerging grade, third one is cyclical, fourth one is a turnaround, fifth one is sunset, and number 6 is what we call startup or newly listed stocks. So startup and newly listed stocks, so Luckin Coffee would be classified as startup or a newly listed stock because they don't have a track record or even data to back that up. We will consider it the highest risk, right? Which means that you would put the lowest amount of quantity in your portfolio in those stocks, right? So even if it does drop 80%, it shouldn't really affect your total portfolio, right? So that's how we are a bit more defensive in that sense, yeah. So you need to figure out in your portfolio of stocks what category they sit in. But look, if you're not sure, we are actually running a charity drive where we are giving e-learning out for free. All you have to do is for COVID-19 people who are really affected, especially the daily wage earners. You donate 100 ringgit to anyone. Don't give us money, please. Donate to anyone, and you can join our Facebook ET Online Campus for free, and you can bring 3 friends along as well. And we are here every day except Sunday, where we actually have lesson plans, and you can run a quiz and you can ask questions as well. So if you're not sure, tomorrow, actually Monday's topic is about 6 categories of stock. So now that you asked, I just thought I'll share it with you.
Yeah, don't worry, I'll be sharing more of this.
Okay.
Okay, anyways, okay, two more questions. I think we only got time for 2 more questions. Number one, again, is for Faizul, right? Do you think it's easy to refinance during crisis or during recession?
I don't know if it's easier. I don't know if it's more difficult, but it's really about understanding the rules of the game. So once you understand, for example, refinancing is like basically going to an exam, right? So if you go to an exam knowing what the teacher is going to ask, chances are you're going to ace the exam. Or similarly, right, if you are familiar with how the banking system works, it's not difficult to basically understand whether your loan is going to be approved or not. I'll give you an example. The industry approval rate, right, for Malaysia mortgage last year is below 45%. You know, we bought about R1 billion worth of property, and our approval rate to date is about 95%. Right? We are double versus the industry average simply because before we allow clients to buy or even refinance, we actually prepare and prep them to make sure that they are ready, fit, and proper to go. So essentially, I don't think it's easier or is it more difficult. If anything, my prediction here is that mortgage will be easier 6 months from now. Okay, 6 months from now. Why do I say easier 6 months from now? Well, for the next 6 months, we got a loan moratorium. People don't really want to apply for loan because they are worried about their jobs, you know. And are we all basically thinking that the bank doesn't need any more loan, new business whatsoever for the next 1 year? Come on, man. You know, how can public bank maintain those kind of dividends? You know, Maybank, you know, come and say to their shareholders, you know what, because of COVID-19, we decided not to do any loans. It's almost impossible. So from the looks of it, I think it's going to become easier. Right? If you look back in 2009, 2010, similar things has basically happened during crisis. Okay, as long as you are a sound borrower, right? You are a sound borrower, you shouldn't have any problem getting loan. I mean, look at me, right? I mean, like, you know, I'm like, you know, highly leveraged guy. And here I got text from my banker and say, okay, boss, you can borrow another 2 more million today. Right? So I guess I have a bit more property than most people watching as of today. And yet I can still get a 2 million ringgit additional loan. So there must be something that I did right. And of course, I prepared my portfolio properly for this. So typically that preparation takes 3 months to 6 months, which is why, like I said, everyone watching, if you can, please join my free group, Faizul Ridzuan private group on Facebook, whereby we actually talk and we're actually going to teach people how to go and do this for free, right? Sempena COVID-19.
Yeah, so I was just about to ask you that question. I already answered it.
Yeah.
So yeah, I think your colleague here, Christina, has already put the Facebook that you can go to. So if you want to learn more from Faizul, just go to his private group. It's for free, isn't it, Faizul? Is it for free?
Completely for free, Sempena COVID-19.
Yeah. All right, awesome. So if you want to know more about investing in properties, I mean, Faizul, you really listen to him. About his property journey and his, and he talks about property investment, what to look for. So if you want to learn more from him, just go to the Facebook page. It's already on the comment section over there. So just go there, right? So I'll also talk about what you can do with properties in a short while. Stocks. Because in Equity Striker, we are also going out investor education for free, right? And I think this is what we are doing currently. We believe in building values for other people, right? So now one last question before we go to the promo. So Faizul Ridzuan, I'm sure there's a lot of things that you can learn, right, in property investment, because for myself and Alvin, when it comes to property, we only know how to buy, and then stay. Okay.
Buy and hold forever.
Right? Yeah. In fact, I just sold my property 2 years ago, get some cash and buy stocks. Right? That's the only thing I know. Anyways, so if you want to learn more, like as Faizul said, I mean there are similarities, right, between both of these this investment class. Number one, they are the best investment class, that is going to rebound after every crisis. Okay. And of course, in properties, you have more leverage. So if you are a person who likes leverage, like Faizul over here, highly leveraged guy, but still look very cool. Because if I'm highly leveraged in stock market, I don't think so I can sleep at night.
Yeah.
That's just me lah. Anyways, so there's leverage advantage, and of course, and in a you know if you know how to find the right property, of course you are able to get the yield. And Faisal also has mentioned about finding price where it's below its value, right? And
Yes.
of course, at this kind of times, like you say, it's very difficult to find this kind of properties where the price is below value, and you say it's only a handful of them, right? Yeah, it's all about timing. So I mean, long term, yeah, both of them can also make money if you know what to do, right? Stocks, you have a little bit more flexibility in liquidity and all that, right? Um, and basically you can start very small lah. I mean, with
Mm.
1,000 ringgit, because there are people asking questions like, how much can you start stock investing, right? Right, 500 ringgit or 100 ringgit, you can already start, right? So again, it's so fractional, it's more liquid. So there are pros and cons, right? And I believe that you have to go and look at, and now's the best time, because we are providing you this platform to learn about both stocks and also properties, right? And Faisal is there to also assist you on how you can invest in properties and how to get ready for properties. Or maybe if you already have properties, like Faisal said, he wanna cash out some and maybe invest in stocks, right? So it's the best platform for you to learn, because both of Far Capital and also Equity Tracker, we are providing this education for free, right? And this is the best time to learn since we're already at home. Okay, so for Faizul Ridzuan, again, his colleague over there will put this website. You just go to the Facebook page so you can enter his group, right, to learn more about property investing. So now I have to do a little bit promotion for on our side, lah. If you don't mind, Faizul.
Go ahead.
So yeah, Alvin mentioned earlier, right? If Faiz, if you can show my screen. Okay, we have this since the MTO started. We have this investors KopiTime at 8 p.m. every single night, right? So you go to our Facebook page, which is facebook.com/equity tracker or youtube.com/equity tracker. We do this every night, and we invite guests like Faizul. We invite guys. Like, even we do a cryptocurrency. We even invite CEO, and the last CEO we invite was actually from Kim Teck Chong, who distributes gardenia bread in Sabah and Sarawak. So you want to know about the industry, you can join us. And we also have a lot of other topics, a lot of other speakers who come in and to be with you at 8 p.m. every single night, right? So tomorrow we'll be here as well. So please like our Facebook page, and then you should be able to get notifications, all right? And this is every single night, 8 p.m. Now, Alvin has also mentioned about this charity drive that we are heading right now. We call it the ET Online Campus Charity Drive. We have actually built an online campus where we have videos, tutorial videos. We have live sessions. Today is the 5th live session that we're having, and we're going to continue to have these live sessions. And even though after the whole thing is over, you can still look at the videos. All right. So it's more like an e-learning campus where you'll be able to learn investing based on value investing and also look at price chart analysis, right? So this is the thing that you'll be learning. There are a lot of resources there, and this campus is based on a Facebook group, all right? And we keep on adding more resources into that, into this group lah, into this online campus that we just named, right? So now this is going to be for free for everyone, okay? But you only have to do one thing, right? How to participate in this is that you have to make a minimum of 100 ringgit donation, okay? And you get to bring along 3 friends, okay, to attend for free. Now the donation is, you make a donation to a charitable organization that you want to donate. Okay, you don't donate to us. We don't need the money, right? We are just here to actually spearhead this charity drive. You just make the donation to someone. Keep the receipt, because we will be asking you the receipt later on that you already made the donation, and then we'll guide you how to join, right? So to participate in this, just WhatsApp us at 603. The number is there, 603-8408-2070, right? Then you just type hi. Once you start to type hi, a robot or a chat bot will appear, and you just have to type 3 for a live chat, because we want to basically get in touch with you, right? So just number 3 or type number 3 for a live chat. And then from there, our colleagues will guide you on how you can get into online campus. All right. So the number to join is 840-603-8408-2070. So I repeat, 603-8408-2070. And this number you can actually WhatsApp, although it looks like a landline, right? You can actually WhatsApp. You can even call if you cannot get us. Just call this number, right? Whatever you do, go to SMS lah. Just call or WhatsApp. All right. So again, this number 8408-2070. So I hope that you are able to join us in Equities Tracker and also Faizul Ridzuan to learn more about properties investment. All right. Okay, so guys, I think time is up. Like I said, so we take it from our own side. For those who are interested in properties, Faizul, I hope you are able to help them, especially stock investors, to look into properties investment. We definitely want to hear from you, after the MCO is over, and get in touch with you again and go and real KopiTime lah, not virtual KopiTime.
Hey, let's make minimum 7 figures, right? Don't waste a good crisis.
This is a good time, right?
Don't never waste a good crisis. That's all I can say.
All right, awesome.
Right.
Okay, so for those, so any last message you want to pass on to the audience before we end?
Stay safe. It's not 2 more weeks, so we'll still be here. Come and talk to us if you want. Any ideas of stocks, right? Really now is can't be a better time.
Okay, Faizul?
I would say from a timeline point of view, the next 2 or 3 months is very important for you guys to raise as much cash as possible. For me and my clients, the timeline to go for stocks is to actually enter in Q3, Q4. I think I've shared with you the reason why lah. So I will not want to share in public right now, but Q3 is the time. And then for those who are prepared, like I said, this is a time whereby you can easily double, triple, quadruple your capital for the next 12 to 24 months. For those who are unprepared, you'll be watching this crisis thinking, why the hell didn't I do more at this point of time? So I hope people who are watching today, you have been warned, you have been prepped, and if you don't make your next 1 million in the next 24 months, don't blame anyone else.
Right, Alvin, have anything to say?
No, all good. Agree.
Awesome. So it's really a good time to take this opportunity now, especially if you do not know anything. Just join us, just join Faizul, and we will basically guide you on how to do property and stocks investment. Because like I said, both of the asset class are the best asset class during any crisis, and it's just up to you which one you actually want to pursue, right? You want more leverage, go to properties. You want to look for stocks which are at a real discount at the moment, look for Equities Tracker. All right. So in the meantime, for those who want to have an access to our Equities Tracker platform, we actually giving out this access for free, right? Because if you look earlier, Alvin actually showed you some of the figures, some of the company financials, and this is where you can actually get the company's financials, right? So same number, just WhatsApp to 603-8408-2070, and then from there we will guide you how you can get the free access to Equities Tracker platform. All right. Thank you very much, Faizul, for joining us tonight. I hope
Thanks for having me, guys. It's been a pleasure.
Thanks, Faizul.
Right, awesome.
Okay.
All right, Alvin.
Benny, let's make some money together.
Yeah.
Awesome, man.
Guys.
All right,
Bye-bye.
thank you, guys.
High five.
We'll see you again in the next KopiTime, which is tomorrow at 8 p.m. Have a good evening.
See you guys. Bye-bye.
Okay, guys.